Now, that crisis in Ukraine has sparked massive outflows of money from Russia earlier this year, and it contributed to a big dip in the value of Russia's currency, which has recovered somewhat. But there are signs of further weakness ahead. Natalie Powell reports from Moscow.
The exchange rates of dollars and euros line many of Moscow's streets. Geopolitical events this year and the threat of sanctions against Russia have seen large amounts of capital leave the country in this way. Capital outflows reached a peak here in March, with many changing their savings into dollars or euros to protect against the falling value of the ruble. The situation has gotten better in recent months, but the capital outflows for this year are still likely to be higher than they were the previous year. Money exiting the country means less of it is at work in the local economy, and that's a concern for any country. But some experts believe capital flight is slowing in Russia.
Central bank estimated the outflows at the level of around 6 to 7 or slightly higher billion a month in April and May. So this suggests that the capital outflows moderated. Partly this is related to some stabilization of the ruble exchange rate, and therefore we do not expect any further deterioration of the situation unless we see the further sharp depreciation of the ruble in the months or quarters ahead.
The Russian economy, though, has been stagnating. Over the past 3 years, growth has been between 2 and 3%. Margarita Zubnina, associate professor at Moscow's Higher School of Economics, says this, combined with recent events, has made Russia's population nervous about the future.
I know quite a lot of people that are already leaving the country, so they are not just changing rubles, they're changing their life. And also a lot of people, they just changed their money in this March crisis. They're keeping their money in currencies because they're afraid that ruble will start falling again when the central bank will stop to support it.
Russia's capital outflows are expected to be over $100 billion for the full year. And although capital flight has eased, many have decided to keep their savings in dollars or euros, which could have a negative effect on the long-term stability of the ruble. Natalie Powell, CCTV, Moscow.